Welcome to Stockwatch with me, Simon Brown, and joining me to unpack your stock-related questions today, David Shapiro, Sasfin Securities, Schalk, Louw, PSG Oak. Be sure to send your questions through email stockwatch@bdtv.co.za, SMS 41392, or on Twitter at BusinessDayTV using hashtag Stockwatch. Gents, thanks for the time today. Schalk, let's kick off with you. Let's kick off on that Richemont update. The number that always stands out, 7.4 billion euros of cash. But their Jan update surprised the market. We got a 10% pop. The year-end result surprised. We got a 10% pop. The market seems to have caught on to Richemont today, only a couple of percent. But I mean, not bad numbers, all things considering, I thought.
Say that again, 7.8 billion euros in cash. I mean, that is frightening numbers to think. I mean, they're creating that amount of, just shows you, I mean, the luxury goods market is definitely not taking any beating soon. I mean, we know the US has seen a third quarter retraction in economic growth, but clearly it hasn't been on the luxury goods side, because when you delve through Richemont's numbers, it actually looked very, very good. I think the Americas number showed a growth of 17%. Europe also something like 10 or 11%. Japan struggled, but Japan struggled for obvious reasons. Mm-hmm. But in general, I thought that the results looked really, really solid, and surprising to a certain extent. But it just shows you again. I mean, I remember in the midst of COVID. When we were locked down and everything was sort of looking very dull and really looking bad. I mean, the moment COVID restrictions started relaxing, and this is one of the first things that the people globally did. They actually went and bought luxury goods, as if it will make them feel better to have a Cartier watch, after being locked down for the last 12 months. I mean, it was just frightening, and this time around just seems similar. We've been sitting in a geopolitical, very difficult environment. We've got tariffs, we've got people not really talking to other and others really talking to each other. I was actually quite surprised to see Richemont's results coming out this good.
Yeah, they were. And for context, that cash pile, David, they could buy Absa Bank with the cash pile and still have some money left over.
Yeah, Simon, I keep saying, what does Johan Rupert want? What is he going to do with Renette? He can't do, this has got more cash than Renette, In other words, he's got plenty of cash, he's got plenty to do. That's why I think he's just going to pay it back. So, I've got enough on my mind. But it was, what's interesting as well, and just talking to what Schalk's saying, because he mentioned Cartier, because if you look at the makeup, it's no longer those watch pieces. It's no longer that was always, if you said Richemont, you'd always say timepieces, these expensive what. No, it's only about 15% of their business now, and not doing that well. So it's all Cartier, that's the high end of jewelry. You don't think these people are around, but they're there. And in big numbers, enough to give Richemont, what's it, that 7.8 billion odd euros.
But David, we see this in Hermes, we see this in Ferrari race. The high-end luxury is to Schalk's point, it's almost bulletproof.
Yeah, it is. That's why I think the three, and Richemont's coming into this category. It's Hermes, Ferrari, and Richemont's kind of creeping its way into this. It was always the poor man of the luxury sector, or the bottom end, the ugly princess. It was always LVMH and Kering and all of those ahead, and Richemont's making its way on jewelry, Van Cleef and Arpels and Cartier.
So, I would like to add, David, and it's maybe an important trend we're seeing. Yes, I think it's luxury goods and maybe spending in that regard. But also, I think we shouldn't disregard the environment we're sitting in. Look at the gold price currently, look at the silver price. Yeah. People suddenly are opening up and buying these little gold plaques and Kruger coins and those kind of things. And the thing about a Cartier watch, it's not just the gold and the little diamond pieces inside that's got a value. That name Cartier has got a massive value. So I wouldn't really put it past a lot of these people buying these Cartier watches, buying it for investment purposes, looking around, say, well, this country is sanctioned by that country, we can't have this, but you can have a Cartier watch, put it on your arm, go to another country, and go and sell that for millions. So Yeah, I think it's also most probably the environment we're currently finding ourselves in, not just sort of a luxury spending trend.
Okay, so
Simon,
smugglers
you
as
weren't
well.
here last week. You weren't here last week where Schalk made an important point that I have been quoting and stealing the whole week.
Yeah.
Remember, what's the top card you get? Platinum. Okay.
Yeah.
What points if you go to an airline? Platinum member. Where's platinum versus gold? A third of the price.
I want my gold card back. I really want. It's worth 3 times the platinum card at least now. So yeah.
Okay, so there's some bank strategists out there who are scratching their head and deeply worried. I hear you on that. Schalk, let's stay with you. Let's go from Richemont to the other side of the JSE. Question coming through. I have ArcelorMittal SA shares. Should I hold on to them or sell in the current situation the company finds itself? It is a tough space. Would you hold on to ArcelorMittal at this point? Is there hope? There's always hope, but...
Yeah, and I also say hope is not a strategy, Simon. So firstly, I think disclaimers out there. I'm not a holder of ArcelorMittal. It's going through really, really tough times. When they're talking about closing plants, 3,500 people losing their jobs, they've most probably got it in them to keep certain of their plants open until September, and beyond that they would most probably need to start further closing these. That's usually a very, very difficult space to be buying into a company. They call that a falling knife.
Yeah.
Be aware to be catching a falling knife. I mean, we've seen ArcelorMittal a few years ago going from absolute hero to zero and then back to hero, and now we're struggling again. I would most probably just want to see them doing a little bit better. But also, I mean, beginning of last year, I was also one of those people saying, well, Pick n Pay, let's see, them doing a little bit better. They went and spinned off Boxer, and look where they are now. Did phenomenal since then. Not really out of the woods yet, but just showed some return on investments that were brave enough to sort of try and catch that falling knife. I would definitely not be looking at that. I just think there's a few worrying data that's coming out, or news that's coming out, and I would be sitting on the sideline.
Yeah, I mean, 3 years ago this was a 10 rand share. 5 years ago it was a 50-cent share. It's now $1. David, ArcelorMittal for you? Can you get excited about it?
For the very reasons that Schalk pointed out. We need a massive industrial revolution in South Africa, or massive amounts of being paid, increasing manufacturing, increasing infrastructure, for us to be able to increase demand for ArcelorMittal, the motor industry. And as we've seen we're not seeing that manufacturing. You saw what happened with Mercedes, who are cutting back on exports. So I just leave it alone. This is a difficult area, and it's sad. It's a sad story for what was a very proud company in Iscor, in South Africa's history, particularly in the industrial expansion and of course in the mining expansion. But it's not a shadow of where it used to be.
Yeah, of course. Kumba and Exxaro, or
Exxaro,
or the Iscor parts in the listing in early 90s.
They all. Exxaro was Kumba,
Well,
so it was the company that held, There was a whole mix-up with the naming, but anyway.
So, David, what about Afrimat? He has a management team who are almost bulletproof. They seem to be struggling. Well, Lafarge, I'm not saying they're struggling, but Lafarge is a big thing. They've got some other issues with some of their other more recent acquisitions. Stock being under pressure. Does this create opportunity here for Afrimat, is the question coming through?
It's difficult. They should be. I hope they're at the bottom. I don't know. I haven't got it in front of me, but I think they're down about 30-odd% for the year. And this was a company that I admired. From the time that they listed, they've always done well. They were in the aggregate sector, very much like Raubex. Very, but I always thought they were much better than Raubex. And then they went into iron ore, and they've gone into, I think, what other areas, phosphates and all difficult kind of areas and that. And it's been tough on them. Iron ore hasn't exactly given them the rewards that we thought it would be. They're still on the aggregate side, but it's been a tough area. Management, good. So would I buy it now? Maybe wait, unless you're a deep value buyer and got the patience. But, I'm a bit concerned about where those businesses are heading.
Schalk, are you a deep value guy with patience?
I've got patience and abundance of them, but in this case, I mean, just to add what David has said, I mean, I agree. This is great management. It's been a company that's been a darling. I mean, whenever we talked about darlings in South African, we talked about Capitec, we talked about Clicks, and Afrimat always popped up as one of these companies. And like you said, I mean, this is let's call it the iron ore acquisitions that they made. Wrong time, wrong place, and then they did Lafarge. Lafarge is sort of a turnaround strategy, totally incorporated. I think it was mid last year they totally incorporated, and they've mentioned it's going to take some time to turn around that business. They're sitting with about two odd billion rand in debt, but management has mentioned many times that they're actually looking to sort of go totally debt free again in 2-3 years time. And the one thing about the Afrimat management, they haven't been a company that overpromised and underdelivered. They sort of always delivered their promises. So I would definitely be monitoring this company as a quality management, quality company, but just know that you are on a cyclical. I mean, this is a company that's been more in quarries and those type of things, which was doing well for them now, and suddenly in iron ore, things like building materials like cement, that's a cyclical business, and we've seen in the likes of PPC, some years it's going to do phenomenal, and some years you're going to struggle.
David, you mentioned Raubex. The question was also around Raubex. Is that more exciting for you?
It's simply because they're sticking to roads, and we've seen a pickup there. So they've done well. Their last set of results, in fact, market cap, they're bigger than, I was just looking now, market cap, they're actually bigger than Afrimat, which is unusual because Afrimat always outperformed Raubex. So at least they're in that area. I don't know much about their businesses in Australia or the but on the aggregate side, they are starting to see a pickup. They also went into mining. They wanted to catch up with Afrimat, so they've gone into, I think it's chrome mining again. It's not a business I know too much about, but they're all right. I think they're probably flat for the year, even though they had a little bit of a kick up recently after their results. I don't think they've made up the loss for the year.
Your take on it? Certainly they're roads local, but of course they've got Australia where they're doing a lot of infrastructure, renewable energy and the like. Your thoughts on Raubex, or is it Raubex? I'm never sure which way around.
Well, it's tomato. I think for us, I mean, I think it's. I agree with David. I mean, they've stuck to their knitting. It's a company that focused on roads, and they've been doing it extremely well. We know that the government has got a few infrastructure initiatives. The whole GNU has got infrastructure initiatives, but they've also mentioned in their most recent update that the tenders, usually it's just the tenders are really slow to be handed out. So if the tenders are actually been addressed and they can actually hand out those tenders, I think Raubex is going to be doing really well, and a company that I will definitely put on my radar.
Yeah, and Sanrail is one of the state-owned enterprises that functions. I mean, absolutely it does. I mean, I've just been all over the N3 and N2 down in KZN, and they're perfectly great roads. Dis-Chem Schalk, question coming through. I bought it about 3 years ago. I think it's exactly flat, although it's been a wild ride. Is it worth holding on, or should I have got Clicks instead?
Okay, so this is going to be an easy one for me. I don't own both. I would have loved to own Clicks and definitely will buy in any weakness. Both great companies. I'm not gonna sort of go and say this one is good and that one's bad, because both companies have been doing really well. I would just say to me is when you look at the most recent, I think about a month ago, they both brought out results. And they mentioned forecast. Dis-Chem mentioned that they're planning to open 38 new stores in the coming year, while Clicks talking about 50 new stores. So therein lies the difference between the two companies for me. You can clearly see Clicks are quicker to roll out these new stores, and I think it's helped them up to now, and most probably will be the one that I'll be buying in any weakness.
David, Clicks, Dis-Chem?
Yeah, I always go to Dis-Chem because it's down the road, and I prefer it to Clicks. But always say, I've got to knock the old people out the way, in order to get while they're lining up for their prescriptions. But it's a good business. It's still a very young business. I think people don't understand that it started at one store, I don't know, out in the south, and since expanded. The younger generation taking over, and it's going to take them time to really get where they want to be. It's a bit slow. I think I would have preferred them to get there faster. But there's nothing wrong with the underlying business. But I must say, from a pure market point of view, Clicks just seems to have the edge on them.
Yeah, absolutely. And to your point, the market likes it, gives it a higher rating at the same time as well. David, Glencore, question coming through. Glencore's also been disappointing. I thought their coal and copper would help, particularly copper. Your take on Glencore? A lot of folks will tell you it's one of the ways to get copper exposure, and Trump is throwing around 50% numbers. Who knows? But what's happening with Glencore? Is it worth holding on to?
They're buying back shares. I think they're generating huge amounts of cash.
Yeah.
From their businesses, probably from their trading businesses and that, which they're using to buy back shares, which is unusual. And they're a conservative. I've known the management team there for some time, and they're quite conservative. And the fact they're buying back shares means that that number one, they're better opportunities buying back their own shares than going somewhere else. So that gives me a little bit of comfort, because they've been hammered. They've been down like maybe 35% this year, and having to claw back. But I mean, if you believe that we're going to go into a better phase of the global economy, and particularly run by copper, and I think coal interest as well, they're well placed. So I've got no strong feelings for any of the global miners. At the top end, but they're okay. Yeah,
they're okay. Schalk, Glencore for you, strong feelings?
Yeah, no strong feelings. Also surprised to see them not really reacting to the recent movements in like you mentioned, coal and copper. But I mean, I saw a recent report. The analysts seem to be upbeat, and like David mentioned, I mean, any company, we've seen it now with the likes of BATS recently. These companies buy back. We've seen it with Naspers earlier this year, end of last year. While these companies are buying, just somewhere along the line, it sort of hit some of these value buyers' radars, and they start buying with the company. So any company that's usually buying back shares, I definitely would monitor them.
And then, Schalk, what about Spur? Question coming through. No debt on the balance sheet. Good brands out there. Consumer still tough, but better. Would Spur be on your radar? I mean, it hasn't done much, but I mean, it's what an 11 PE, almost 7 dividend yield. Schalk, Spur for you?
Oh, there's a few companies on the JSE trading at 11 PEs, and there's a few companies trading at dividend yields yielding 7%. I don't own a Spur. I can't remember when last I went to a Spur. While you were asking me the question, I went like, when last did I have a Spur burger? And I just can't recall. So maybe therein lies the problem for me. But I think it's been a company that's been in sort of difficult times, got them through, and like you mentioned, sitting with a balance sheet as healthy as theirs. I think they could do well. But it's not Spur anymore. It's things like the Rocco Marmas.
Yeah.
There's so many well-known brands within the Spur group. It's not a company that I'm invested in, but I'll watch the results come through for the next few let's call it years.
I haven't been to a Spur in 30 years, but then I've never had young kids. David, Spur, Bright Kamala used to always tell us to go and have a proper steak at Spur, and I got to be honest, I haven't got to it yet.
Whenever I'm in the airport or stuck there for a meal, you go to a Spur. Quality is superb, and also value for money incredible. And I think that's what draws people into Spur and that. But it's, in an inflationary type environment, I'm not saying we're there, they get hit, where you have an economic slowdown. People struggle to take their full families there for a meal, because it does add up now.
Yeah.
Even those cheap steaks are no longer that cheap. And you want to see the price of fish. But they're a well-run business. I've got nothing from that point of view. They're always good, solid. But you've got an economy against you, where people are not splashing out. I don't know. I'd love to see how KFC and all the other places are doing at the moment as well. Whether they're not feeling the pinch. But when meat prices go up, you can't pass that on to the consumer. So you've got to reduce the size of the steak.
Yeah,
But
most of these food companies actually said that one of the main concerns for them going forward, and one of the main let's call it objects that hindered them from doing well was in food inflation. So, if food inflation is a problem for those type of companies, for the food companies, it's definitely going to be a problem for the likes of the Spurs as well.
yeah, no, absolutely. And I got to say, David, to your point at KFC, every time I walk past a KFC at lunchtime, man, those places are packed. I mean, they are absolutely rocking. What about telcos? David, a telco. Question coming through. I'm interested in telcos. I'm not sure. MTN, Vodacom, Telecom, Blue Label. Have you got a preference in the telco space?
None of the above. I'm not, it's an essential. We have to have them. We use them all the time, but I think it's a tough business. And I think we were discussing it last week, Schalk.
Yeah, we did.
They've got to do something innovative. There's something, they've got this massive customer base. We're talking millions of people who use their services. And yet, when it comes down to the bottom line, we're talking decimal points. There's nothing really returned. So I think they've got to learn somewhere along the line. They've got to become a lot more innovative to use the power that they do have, or the customer base. But I don't think we're really seeing it. For me, it's a utility. I used to buy it maybe for the dividend yield, but even then, I'm just, nah.
Yeah, I take a point. I mean, it's utility, and I can't get excited about the sector. And I know they think that banking and fintech is their future, but so does everyone else. Schalk, let's go to some stock picks. You're going with Bidcorp.
Yeah, I mean, we were talking about food companies a little bit earlier, and let's call it restaurants. I've actually chosen a company that actually provide these restaurants with their food, namely Bidcorp. Also, one of these highly great quality companies. Always wanted the opportunity to buy in, but it seemed to be on the higher side. So for the listeners out there, what I love about Bidcorp is it's a well-diverse company. I mean, to buy into a Bidcorp, you're not buying into a South African company or a pure US company. When you look at their splits in terms of revenue, it's pretty much a third Europe, it is a third Australia and the UK, and then a third, we're talking about emerging markets. So you've got such a great diversified company that's trading definitely with the recent pullback in the share price is giving us an opportunity to buy a company that's usually trading at higher multiples at, I think, quite decent levels. So yeah, going for Bidcorp.
Yeah, no, and it has come back a bit, and as you said, that multiple looking a whole lot better. David, ASML, I hold it. Results came out last night. I wake up this morning, I read the results, I think, these look good, and then I check the pre-market, minus 7%. What did I miss on those numbers?
They're downgrading their outlook for 2026, and they're conservative. They're a Dutch company. They're not a Zuckerberg or a Jensen Wang or anybody. Have you ever seen an excited Cascorp? They're very conservative in their outlook. So, for that reason, correctly so, they downgrade where they're going to go in 2026. It doesn't mean that necessarily it's going to be tough, but they don't want to put their necks out there. So the market hurt them, not because of the incredible results that they have produced and also because of their increasing order book, but rather because they've downgraded 2026 sales and so on. But this is the opposite of where Schalk is. This is the high end of technology versus the low end of technology.
Ultraviolet lithograph.
Funny enough, for the first time in years, ASML has actually now hit my radar. I mean, and yes, to add what you've just said, I mean, they mentioned in the results also the tariff worries that they're talking about. If these tariffs go through, this will most probably mean that their chips that they export to the US will cost 30% more expensive. So that's major worries, but that creates opportunities. I mean, we've seen it in April when this whole tariff thing started, and we've seen where the likes of the Nvidias went up last year to a $3 trillion company, then went down to close to $2 trillion, and now today it's trading $4 trillion. So, I mean, to listeners out there, ASML extremely high quality chip company. I mean, AI is not going to go away. In actual fact, it's just going to go bigger and bigger. About 30% of ASML's business is really coming from China. So the tariffs is not really going to affect them in this regard. And I do think that the more expensive it will be to export to America, the more they will focus on other parts of the world.
They've got tech.
No, I agree with David.
And tech no one else has got, and that's the key function. You can't get your UV ultraviolet lithograph anywhere else. That's all for Stockwatch today. Thanks to our guest, David Shapiro, Sasfin Securities, Schalk, Louw from PSG Wealth, Old Oak. Up next, the close. Stay watching.